Okay, I'm at tradingviewhere.com. We're gonna take a look at electric vehicles and look at some how we can use exchange traded funds, and we'll look at a particular individual one too that might be interesting. And right now I'm at this thing called iDrive, right? It's IDRV. It's an exchange traded fund. Now here's the thing with exchange traded funds; those are baskets of stocks. So instead of buying, let's say, Tesla, I could buy a basket of stocks that might have 25, 30, hundreds of stocks within a particular thing. So like the S&P 500 is the 500 largest USA stocks, and the Nifty 50 is the 50 largest by market cap India stocks, and you could go into particular sectors like electronic vehicles. And so it's real important to know what you're looking at if you're going to be following something. So this iShares, iDrive, a lot of people think, oh, that's electric vehicle maker, but they're actually electric vehicles and autonomous driving technology. So it's both autonomous and electric vehicles. So it's not a pure electric vehicle play. So if I look at, let's say, go to the iShares website as an example, and I start looking at their holdings, that's a key thing, I can see that I'm not seeing a whole bunch of electric vehicle manufacturers. Obviously, there's Tesla, and that happens to be their number one weighted thing at 5% weight of their holdings. But you can see I've got Samsung, Apple, Intel, Alphabet, which is the parent company of Google. Toyota makes cars, Qualcomm, NVIDIA, and Advanced Micro Devices. So other than Toyota, and certainly Tesla is an electric vehicle maker, and Toyota has potential on that. These are more involved in that autonomous vehicle type sector. So if you're saying, I want to really invest in pure electric vehicles in an exchange traded fund, you're not getting this with this. It's both. So you can see it's iShares, self-driving electric vehicles, and tech ETF. Is the full name of it. So just always good to be aware. All right, well, let's learn some of the concepts that we've been learning in the course and apply some of those to an exchange traded fund. You might still like this. Say, no, I love this. Look at all these great stocks. I want to invest in this and get that diversity there because I do want to play in both EV, electric vehicle, and autonomous driving. So let's say here we are at iShares, and which is the exchange traded fund. You want to go to full featured chart. Again, whatever you might be using, I use this one because you can use a free aspect of it with TradingView. So let's go to full featured chart here. Okay, let's blow that up here a little bit. Here we go. And here's what we're looking at, those electric vehicle in autonomous driving. One thing too, because you saw it had all those different types of stocks in there, like Apple, some of them pay a small dividend. So on your iDrive, if you hold it for more than a quarter, you would get paid a 0.67% dividend, a very small dividend at this point. So you get a little income on it too. So if we look at this, we can see, what are we seeing here? So we're seeing a definite gap down as far as what's going on here, right? We see a definite gap down over this is a current trading day, and then the 3 days prior, we can see that we have a definite gap down here. But if we look at it long term, and a lot of people might trade like an exchange traded fund like this, over a more longer term period, for example. So let's put our tools up here, and if we looked at this over a real long term, and we can see going way back here, let's say we'll put it right here, and we connect ourselves, and we can see, okay, what are we seeing here? So we have this nice long term, and long term, I'm talking about, we're going back for about 4 months, about a quarter. So going back a quarter, we've had this very nice long-term upward trend with a big, nice space in here. So, and we've got some touches in here, and it held above that line, went up a little bit more, approached the line a couple more times. But now what's happening, even with our long term, we broke through the trend line. So, it is a definite break here. Look at that. It's a full gap down. It's a full breakage of that long-term trend line. Even if we looked at more of a short-term trend line, it would be breaking that as well. Maybe we're looking here where it was more sideways, looking at more short-term. And, technically, if you go like here, maybe we're not as breaking it as much. If we're looking at, like, let's say these guys here. So maybe we are in more of a pullback here. So that could be a way to look at. We've had a gap down though, but maybe we're in more of a pullback that might be occurring here. So with that, it's something to consider as far as, do we trade on it? So maybe what we do is, instead of looking at these, we're looking at these lines, we could be saying, well, maybe we're in a new downtrend here. Maybe that's the other possibility that's happened. We don't know yet because this is our peak here. Like here's our peak. And we maybe have a touch here and touch there. Well, there's two touches. So, you could argue definitely that there's a downtrend here as well. But we've had a nice up day here, or currently during the day, but there's some indication there. So we might need some more indication going on here. So there's our trend type stuff. But let's say we put on, let's take a look at this and say we'll put on a moving average on here. And then we can look at these moving averages from different time periods, whether you might be trading a short time frame or a long time frame. So let's say we're going to use a weighted moving average. And the real key is with our weighted moving average is how long we want that time frame to be here. Let me take one off. I put 2 on by accident. And I'm going to just adjust my weighted moving average in terms of style so you can see it a little better. So I'm going to make my weighted moving average in orange. I'm going to put it real thick so you can see it. And this is on 9 days right now. So it's just 9 days, looking at the last 9 days, weighting the more recent days a little bit heavier with the weighted moving average. And you can see how we've been above the weighted moving average, but then it broke through a little bit here, but then it went back up and hung in there, and then it's definitely below the weighted moving average. So this was a definite gap down, a definite sell signal. We might be on a definite downtrend for all we know. So right now, this would be, if you wanted to buy, you might be cautious on this in a short-term type frame because we're looking at 9 days. But let's say we just believe in autonomous vehicles and electric vehicles, and we know long-term that's the future, right? We think that's the future. So we go backwards, we can see we still have that moving average where it's a 9-day moving average and it's followed along there and stayed above it. Now let's change our moving average to something a little bit more longer term. Okay, so if we look at it from a 50-day moving average, you can see how we're well above the 15-day moving average. Went up here, so that was a buy sign, and then stayed well above that for a very long time. Now it's approaching it. So we might want to look at this and say, okay, from a long-term viewpoint, we might still believe in it, but we might say we want to see if this is going to turn around and start going back up. So that's something we might want to look up here and see if that's going to turn around and go back up, because it definitely have a gap down. We definitely might potentially have a downtrend after our gap down. I mean, that's something you got to be noticing there, and just see what happens here. Are we going to continue that long-term, upward trend? Is it just a minor pullback? But a gap down is really concerning with that. But if we look at a longer-term moving average, okay, that hasn't crossed yet. Maybe what we might want to do is let's use an indicator, a moving average crossover roll. We're at a 50-day. Let's use a 10-day weighted moving average. We'll keep them the same and look where they cross and see if we have a crossing opportunity. So not only, as you know in the lessons, how we have moving. Okay, so our shorter term one is in blue here. Let's change that color just so it stands out a little, or let's make it a little bit more thicker. Let's just do that. There we go. Okay, so as you know, not only when the price crosses a moving average, that's a definite buy or sell signal, right? So if we look at this is now a 9-day moving average in blue here, you can see right here, once it gapped down, that was a definite breakage of that. That's a definite sell signal, right? But we're still above the longer moving average. So if we're looking at, maybe we want to look at a moving average crossover where we're not looking at the prices, but if you remember that lesson where we're looking for the two crossovers to basically cross each other over, right? So they're gonna cross each other over. Maybe something like, it's gonna look, where it's gonna cross each other. Let me go up closer. So if these two lines here, the solid blue line and the orange one, had a crossover, and the blue one is crossing below the orange one, the shorter term's crossing below the other one, then we know that's a definite sell type signal. Or it could rebound and start going up and look at other indicators that we've broken through a trend line and we're headed trending up, for example. And you can see way back here where we had a crossover, you can see where it crossed over to the downside here. We go back in time. And then when it crossed above the line, the blue line, that was a buy signal. And we've been well rewarded with that buy signal. It came back and touched again, but then we either went down a little bit or it crossed above, and now we had a definite, look at that nice long run. And then now we've had this long run. And by the way, if you were in this here, maybe you have a stop loss at a level like around here. If you have a trailing stop loss, it might have trailed all the way up, following up this whole thing. You would already booked your profit. If you don't have a stop loss, I suggest you always have a stop loss and keep adjusting it as needed. But if you don't, this might be an opportunity to say, if I bought in around here, let's say I bought in on this point right here, look at all that profit I've made. I might want to just sell here just to get my profit, just to lock it in, because right now it's getting, I'm not sure which way it's going to go. Or I might be able to say, okay, I can go down a little bit further. I'll take a little more risk, but I don't want to keep going all the way down. I want to book in that profit. And then I can look for these buy signals to maybe buy in again. So that's one way to look at from just the simple or from weighted moving averages and some crossover type things. Let's look at another, let's take these off here, and let's look at another, let's look at another one here. And Tesla is one everybody will look at. Let's look at something a little bit more just different, right? So let's say you're interested in Nikola, right? Nikola, which makes electric vehicles, more emerging, stock in that field. Tesla is dominant, at least at this point, but Nikola is emerging and does some interesting things. The other thing that's interesting about Nikola here, I'm going to go back, just apologize for my screen movement here, and I want you to see here. You see how we have this long kind of flat line here? It's hard to see because there's not much trading volume here. These are all individual tickers. I mean, if we were to zoom in on that, you would see individual opens and closes, but they're really staying around the $10 mark here. See how it's like around 10.23, 10.50, 10, staying real solid there. I have a course called SPAC investing, special purpose acquisition companies, which is like an IPO. It is an IPO, whereas basically a SPAC company raises a bunch of money and goes to a private company and tries to work out a merger deal and bring them public. Bring them public means they can trade on a stock exchange and we can trade them. So before Nikola became a publicly traded company, there was a SPAC out there with a different name that you would buy in at $10. That's kind of the standard amount. And then what happens is they announce that they're going to merge with Nikola, and they're going to bring it public, and you can see how it had this sharp spike up here, right? It's hard to see maybe, but you had a sharp spike up here. Because now it's going to eventually trade as Nikola, and that's where it goes through this period where they're going through the due diligence period, and then it's more of an IPO, probably right around in this time frame. Certainly right here, we had look at some of these spikes up here. So if you're interested in special purpose acquisition companies or SPACs, check out that course. But that's why it started so low. But if I was looking at Nikola, because it's more of a new emergent type of stock versus, let's say, even Tesla, which is much more established, much more volatile, right? Much more real highs and peaks and valleys, much more volatile in terms of how that would look. And you can even say long-term, if we looked at this as a long-term trend, let's say that's an outlier and we just ignore that. Let's go start here. But you could say long-term trend on Nikola, you're looking more of a downtrend. Now you could draw like these two, or you could draw up here, let's say here, and you'd be watching for that to break through. I'm not going to alert. You might be watching for that to break through in terms of the trend. But let's look more at our more recent time frame here, because this might be something we want to trade a little bit more, more in and out. So we had, if we look at recent time here, we had a bottom here and we had a trend here. We could say, okay, that's still above the trend, so that's good. And we had some real spike ups, but then we had some profit pullback. That's probably what's happening here. We've touched the line 4 or 5, 6, look at all these touches. So it's a nice strong uptrend, a nice peak here, but now we're having some pullback. The question is that pullback going to start to level out, or is that pullback going to break through our line? Let's look at another factor here. Let's look at something like a rate of change, right? So let's just to bring in some different types of lessons here. So we're going to look at a momentum indicator rate of change. Now RSI tends to be a more popular and used indicator, relative strength index. But let's look at rate of change just because we have a lesson on that. And as you recall from rate of change, you can see that if you're above zero, the idea is if you're above zero, that's showing uptrends, right? That's kind of telling you there's an uptrend. And below zero is telling you it might be in a downtrend, right? So you can see it's not always perfect, doesn't always match up perfectly, but you can kind of see we're more likely to stay in an uptrend. We've been in an uptrend for a while, and this is indicating to us that it could be more likely to stay in an uptrend. Versus right here, it's kind of indicating this could go to a downtrend. It didn't. It actually stayed or had been in a downtrend. Actually, you see how it had been in a downtrend, and it stayed there, but then it started to turn around, went to touch that thing, but we're still above zero. And really, once it got to here, and you can see the line up here, right about here is when the ROC was starting to indicate, no, it looks like we're definitely in an uptrend, and it did continue from there. So if we look at this from a current standpoint, we could say from a rate of change that we're above zero, could be still in an uptrend, so that's a good sign. We've had some down days, so there might be a little pullback. Our long-term trend, our longer-term trend has been pretty solid. So these are all, good types of indicators around, Nikola, though we have to be aware with Nikola that it does get spiky at times. So you just have to be aware and ready for that as well. The other thing with Nikola too is they have lots of really narrow trading ranges, right? You see, or as far as open and closes, some have a little bit longer wicks, but look at all these kind of more doji-like stuff all over here, a little more established here, but right in here there was a lot of indecisiveness too. In fact, let's look at like some market sentiment and some volatility. This is a volatile stock, right? So this is where maybe a Bollinger Band might be helpful, right? So let's go down and find a Bollinger Band, put that on. Okay. So what's this telling us? If we look at Bollinger Bands, you can see like, oh, look, we had this, let's go back a little bit further. We had a walking down the band. We had a little walking downtrend band, went to the middle, and as this one walked back up the band, right? And even had a big outlier here. But then came down, and then had a big gap down, which brought it way down in the middle here, and then started to kind of be in the middle and drift to the bottom, touch the bottom, maybe a downtrend a little bit. But now we enter the squeeze period here. See how it's really getting tight there? That's the squeeze. So that's a period of indecisiveness. But right about here, that gets a little more decisive and starts to touch a band. That's an upward trend signal. Came off it though pretty quick, but then it went back on it. So walked up the band a little bit and then came off and then on a little bit. And now we're off again. So this is telling me we're still in a squeeze, though it looks like we might be coming out of the squeeze. So if you're interpreting this and saying, okay, we might be on a nice uptrend, maybe a temporary pullback, it'd be interesting to maybe wait and see what happens this next day to see if we go back and touch up there. Also, what's seeing happening with our ROC, it's still above there. That's a buy signal as well. So there you have it with Nikola as far as a couple different ways you can look at that. And, look what's happening with this trend line. Are you going to break through it? Are we going to go back up on that Bollinger Band? This is looking nice as far as a buy signal. But right now, we might be in a little bit of period of indecisiveness. Now, you could trade this, actually. Though it's a little indecisive, you could trade it and just make sure you put a stop loss in there below it, right? So you put a stop in there to, in case it does start to go down and break through that band. In fact, you might put your stop, or through that trend line, you might put your stop just below the trend line. Because if it bounces off it, then you'll stay in it. But if it, let's say, breaks through the trend line and really establishes a downtrend, then you're getting out before it goes way down. By the same token, if let's say you had bought way back here, or maybe you bought here, you've had a nice little upright here. You've got some nice profits. If we put, let's say, some two lines on here. Excuse me. Let's see if we put some horizontal lines here. Let's say you had bought on this strong signal here, and you had bought let's say right in here somewhere, right? So that's one line. Well, that's our line. So anything above this line, we're going to have profits. So if you put your stop loss in here, you've booked in some of that profit between here and still stayed in your position if you had bought this previously. So a couple of different ways that you can apply a few of the indicators into both an exchange traded fund and also into, in this case, a very spiky type of emerging electric vehicle stock. Oh, and one last thing, I put volume on here. Usually volume will default on it, but you can see along the bottom, this is volume, some bars that show you how volume has been going as far as trading volume, how many actual trading transactions. You can see it's been pretty steady, a little spike up here that brought it up, and then in terms of volume, and you can see how we have this long upper shadow, and then the volume stayed pretty steady, a couple nice days in volume, but then now the volume is really kind of petering out. So, there's not a lot of, like if I was worried that this was going to have a big spike downward, I would expect this volume to be higher. The same token, if this was going up and I might like maybe a gap up, I might expect this volume to be upward too. But right now it seems pretty calm. People are watching, people are waiting, but I think if there's some buy signals coming up here, maybe you'd see this volume coming up to here or maybe up to a high level. So be kind of watching for that as an example of how you can use volume as another confirming indicator.